Srei Infrastructure Vice Chairman Sunil Kanoria joining in to talk about what exactly were the numbers like. Mr. Kanoria, firstly, you could walk us through how the second quarter performance has been.
I think this half year of the year has been quite good compared to the previous year. So our profits consolidated, which was 150 odd crores last year's, has been about 250 crores for this half year, primarily driven by the equipment financing business growth, which we have been saying for the last couple of quarters and last about almost 2 years has been pretty robust and strong. So we have seen that reflected in the performance also of this half year and also the quarter ended September. So therefore till September has been pretty good, but yes, the overall challenges in the sector post the aftermath in September late has posed a challenge in the growth in the system. We have been able to work through that, through this challenge due to one, our prudent risk management, whereby we never had any mismatch of our ALMs. We didn't have any much exposure to the mutual fund short-term markets. So that has helped us overall in the first half of the year.
Your margins like, and do you hope to better the margins going forward, or at least make a stable attempt in maintaining the margin levels?
Well, the intent would be to maintain the margins for the next half year. We expect the growth to be strong. We would need to look at how do we raise fresh funding. That would be a challenge continuing looking at the overall environment at the moment. So we'll wait and watch how things evolve. However, we are getting a reasonable fair amount of support from our bankers and in lenders who have been there with us for many decades now. Almost 30 years we've been.
Okay, I think there's been some, but Mr. Kanoria, apologies for making you hold on for a bit. I just wanted to address this piece of news. Coming back to your company, could you give us a sense of what has been the impact of the recent liquidity crisis on cost of funds, and what kind of CP exposure do you have currently?
Well, as I have just said, that we do not have any CP or mutual fund exposure. It is very nominal, less than 2% of my overall book, because we never allowed mismatches in our ALMs. So that's not a challenge. But yes, we expect that the cost of funds going forward would go up, and therefore we have also announced our increase in our benchmark PLR, because all our assets are also floating. And therefore we believe with the cost of funds expected to go up, we would be passing on to our existing customers and to our new customers. So that way we will be able to manage our interest rate risk. But however, yes, with the future growth, we are looking at different avenues to source further funding to ensure that we are able to continuously grow in our markets.
Okay, and could you give us an outlook on what kind of asset quality numbers on gross as well as net NPA, as well as the overall outlook on credit growth that you're envisioning for the rest of the year into the closeout of FY19?
Yeah, so two things. One on the cost of risk, I think that cost of risk has been stabilized post the Ind AS adjustment which we've had to do. So we are seeing a gradual reduction in our overall cost of risk on a quarter-to-quarter basis, and we expect that to only improve going forward, because on the new business which we have done the last couple of years, the cost of risk has been fairly low. It is the past legacy book which is gradually ending up, and we expect it to continuously come down. In terms of the credit growth, the sector we are in, primarily our equipment financing business, the growth has been fairly strong in the last 2 years, and more particularly in the first 6 months also. The sales of equipment has been very strong and robust. We expect that trend to be there going forward also. The issue would be basically how do we ensure that we are able to maintain and manage that growth, considering the liquidity challenges for growth which could be there. So the way we are working out now with the RBI coming up with the co-lending program. So we have initiated co-lending program with various banks, and be able to take care that we are able to continuously support our customers in the equipment financing business. So keeping that in mind, I think and we hope that we should be able to get that support and continuously ensure that our market share and our business volumes continuously grow the way we grew in the past.
Good chatting with you, Mr. Kanoria, and thanks so much for taking the time out and speaking with us today.